Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, many key economies are struggling to find meaningful growth and expansion. But firstly, in China, both their official PMI measures reported improvements in November. These were better than expected results. The factory one was a surprise because it moved from contraction back to expansion, even if it was weak. And the services one was more positive, moving up to 54.4 and a solid moderate expansion. However, a respected analyst is saying that growth in the Middle Kingdom will fall to only 5.7% in 2020 and as investment levels stay weak. In India, their third quarter 2019 economic growth is also sliding down to 4.5% year-on-year and way below official targets. In Japan, consumer confidence rose again in November, continuing a trend that started in July, and that was unexpected. But it still remains very weak. In fact, the IMF said that Japan's growth over the next 2 years is likely to be less than 1% in each year. In the US, early reports are that shopping mall crowds haven't been at their usual Thanksgiving holiday levels, and that online options are strong. Some major retailers are said to be absorbing the cost of tariffs to keep prices unchanged. Not helping sentiment is that the slimmed-down Phase 1 trade deal with China still isn't done. In Canada, their third quarter GDP growth slowed to just 1.3%, above the same quarter a year ago. In Germany, their retail sales data for October was weak and way below what was expected. In Australia, private sector debt growth slowed in October to its weakest growth rate in almost 10 years. And the international media is noticing the recent New Zealand restart of government infrastructure projects, pointing out that these come at a time growth is slowing and taxpayer investment is required to keep it alive. That is the fiscal friend that the RBNZ has been calling for, and we should expect higher interest rates when markets open this morning. US Treasury 10-year yield is unchanged at 1.77%, and that's unchanged for the week. Gold is at $1,464 an ounce, and little change for the week. US oil prices are down further to just on $55 a barrel. The Brent benchmark is just on $62.50 a barrel. Fear of demand falls is behind the sudden reduction, and the price falls come despite OPEC output cuts. And the Kiwi dollar remains remarkably stable, still at 64.2 US cents and essentially unchanged in a week. On the cross rates, we're now at 94.9 Australian cents. That's another half-cent gain in a week. In fact, for all of November, it has gained more than 2 cents. Against the euro, we're little changed at 58.3 euro cents, and that puts the trade-weighted index at just on 69.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.